For the last several years, Americans have been investing in an exciting and growing asset class that Canadians, for the most part, haven't heard much about, much less had access to. We're talking about U.S. midstream MLPs, or Master Limited Partnerships, and they play a key role in one of the most important economic stories of the last decade, the North American energy renaissance. North America is quickly becoming energy independent, and with production booming, the need to move and store oil and gas has been growing steadily.
In Canada, many investors have heard of Enbridge. In fact, they get bills from Enbridge. TransCanada and other pipeline, transportation, or energy storage companies that are known as midstream energy companies, transporting energy from the upstream producers through to the industrial consumers and residential consumers downstream.
In the United States, these infrastructure MLPs have been delivering investors impressive growth and income. Over the last 10 years, MLPs have averaged returns of approximately 17% per year, while paying investors a steady monthly income.
One of the best qualities of these companies is they typically have a toll road business model.
This vast infrastructure that moves and stores energy charges fees on volume or traffic, providing considerable insulation from the ups and downs of oil and gas prices. And volume is growing as the energy renaissance provides America with affordable energy that is powering a new wave of domestic industrialization and manufacturing. Moreover, MLPs tend to secure long-term contracts from their customers.
Many of these long-term contracts include scheduled toll increases, providing midstream MLPs and their investors a hedge against inflation.
With a stable business and growing revenue, MLPs have been able to offer high-paying dividend, or more precisely, growing distributions, and as an industry, they've been able to continually grow those distributions year after year. Midstream MLPs, typically pipeline assets, pay about a 6% distribution, but perhaps more impressively, they've been able to grow those distributions by about 7% a year for the sector taken as a whole over the last 15 or 16 years. A very impressive track record.
The last critical benefit of MLPs has been the diversification they can bring an investor's portfolio.
Historically, MLPs have shown low correlation to other major asset classes like stocks or bonds, meaning the MLPs tend not to go up and down in step with other assets, but instead can help to even out the dips and peaks of an investor's portfolio.
At Front Street Capital, we've become experts in giving Canadians access to this exciting asset class and bringing the income from MLPs back over the border in straightforward, tax-efficient ways. We believe midstream MLPs will continue to deliver investors excellent returns and generous income for years to come. The North American energy renaissance is still young, and experts project many years of continued growth in energy transportation and storage growth. We want to offer Canadians innovative and efficient ways to include these energy infrastructure assets in their portfolio mix.